everybody, Ira Miller here with the Ira Miller Podcast. Today we have a real treat for you. We have a mortgage specialist, a mortgage lender who is going to talk to us about, well, everything from interest rates to what the market's doing today. Possibly, maybe we can look into a crystal ball, see what possibly the future holds. So Mariem Bennett is here with Fairway Mortgage, and she was kind enough to come over here, sit with us, do a podcast, kind of answer some questions, give us all of her knowledge. Well, I don't know about all of it, but some of her knowledge. And so we're really happy that she came to join us today. She was on our live stream maybe a couple of months ago, but we asked her to come back and do a podcast with us. So that's where we're at today. So I'd like to introduce Mariem Bennett. How are you, Mariem?
Doing great. Thank you so much for having me.
You're welcome.
Excited to answer all the questions and maybe help the consumer that they're still waiting to buy a home, to help them make a decision.
I'm sure there's a lot of people who have a lot of questions about that. Namely, I think the main one is, what are interest rates? What are they doing now? And do you foresee anything where they may drop in the future, possibly go up? I know you don't have a crystal ball, and I know we can only speculate a little bit as far as what we're possibly looking at. Let me just say this too. I can tell you, I've been doing this for 24 years, and pretty much every time, especially in the election season, we have a presidential election, it seems like the real estate market just goes flat. People are afraid, they're scared to death, they don't know what's coming, they don't know if this guy gets elected or that guy gets elected. I've had people say in one of the last elections, I'm leaving the country if so-and-so gets elected, right? It's crazy, but nobody's left. The market's still here.
Yep.
We're all kind of floating along. So what do you see right now? I think you told me, we were talking a little bit earlier, that interest rates have kind of ticked up a little bit.
Yes, they have ticked up due to the last meeting that the numbers came up slightly higher than expected, and the number that we were expecting to come lower, just the unemployment rate, came slightly lower. So what I know guaranteed is the prices of the home, they are going to go higher than what they are today. That's pretty much guaranteed.
Historical.
Well, because the demand and inventory just not there. There's a lot of people that they are living with family members. They're sharing even homes, like where you're just renting a room, just to keep the cost of their monthly housing expense lower. So that when the rates go down, they're going to buy a home. And the sad part is, a lot of people that I talk to and try to educate them, they think that the interest rate is going to go back to the 2s and 3s. I hope they do, but I highly doubt it. I think we would, at least in my lifetime, I don't think I would see that rate again.
Right.
But yes, the rate has slightly ticked up about half points in this last week. Just after the people got excited, start buying homes, they could put in offers, and then we got the numbers came slightly higher than expected, lower in another side of the economy, and then created another fear. What people don't realize is 6.5%, 7% interest rates a few years ago, that was nothing.
Right.
Then you still have to come up with 20-25% down payment just to get in a home. When nowadays, like, you have programs that they will allow you to move in a home with 100% financing. Just like USDA. I have a buyer buying a home with USDA, and the value came in higher than what he's paying for the home. And he's rolling even the closing costs in the loan. So he's moving in truly with $0 down.
Nice.
And you will know more about this. I have only been in the business for 20 years. But
Only?
I'm 18. So, the minimum down payment was 25%. And the rates were in double digit. People still were buying houses because real estate is the number one thing for building wealth, and is a secure way. So for all those buyers that they are holding on the rate because they are basing their purchase or they're basing their housing decision on the interest rate, they're really just not doing themselves a favor. Because let's say the rate, we're expecting it by the fourth quarter of this year might drop like a point. But if your interest rate is dropping 1 point, but your home, you're gonna fight for it because they're gonna be all going to for the same home. They have to overbid just to get the house, putting $20,000-$30,000 higher, as happened in 2020 and 2021. You end up having a higher mortgage payment than shopping right now with the current rate, negotiating with the seller, and getting pretty much what you want because you're the only one negotiating with the seller versus another 10 buyers.
Right, rather than have multiple offers.
Waiving inspections, right? Waiving due diligence, and that is not a smart shopping.
I agree, and then you end up paying more for the home, and that's going to wipe out any savings that you think you might have created by waiting for the interest rate to come down. Because just like you said, if it comes down a point, everybody's going to be flooding that market.
Right.
The ones that have been on the fence, the ones that have been waiting, and they're waiting, and now all of a sudden you have multiple offers on all the homes, and then they're driving the cost of the home up, and so all that savings that you thought that you were going to have by waiting for the interest rate to go down,
right.
Now you've messed yourself up.
Well, there's an analysis that I've done for customers that they are seriously just holding the fence and putting themselves and their family in a situation where they're almost uncomfortable living with their parents with 3 children, and just that's not a quality of life living in a 3-bedroom
Right.
home with parents and kids and everybody getting irritated. So the analysis is not only that it's going to be a higher mortgage payments because you're going to be paying more for the home, but how about the equity you're missing out when you're
Right.
buying the home today, $20,000 below market.
Right.
When the market goes up, you're missing an equity. So my advice is marry the home, date the rate, because when you refinance, your mortgage payments will drop. So if the rate drops, it's going to drop for everybody. But you earn the equity that you otherwise lose if you not purchase in the right time.
Right. So that's a good point, because if you're waiting for interest rates to go down, home prices are still going up, and then your equity, like you were saying, you would have had a whole lot more equity in your home had you bought now. So not only if you wait, you might be getting yourself into a multiple offer situation, but now you're buying at a lower price and gaining equity from now until whenever you decide to go ahead and buy.
Yes, and there are many factors to consider. Equity, the cost, because you can negotiate right now with your seller the closing cost, you can negotiate the price, the tax deduction, your rent is not tax deductible,
Right.
your mortgage payment
Oh, that's a good
is.
point.
So there's so much to lose by just waiting and by doing what everybody is doing.
Right.
So you got, in order to get a different result and more successful one, you got to go to the other direction, making sure that you're doing your due diligence by speaking to a professional, mortgage professional, a real estate agent like yourself. And you're always going to be paying for a mortgage, either yourself, your mortgage, or your landlord. So
Right.
It's your choice.
Yeah.
Just if you look back in 2008 for the mortgage meltdown, real estate meltdown, everybody was so scared building wise, so no builder was building homes since that period of time. And even 10 years later, they started building. They have not started building at the same speed and the same need that we need in this nation. So there's so many people, they need a home. There's not enough inventory to support that. And this is what we base, because when you look at the available homes in the market, you cannot count the resales. The resale, when somebody's selling the home, unless they move to Costa Rica or Dominican Republic, they're going to need another home. So that one is the exit out. So you got to look at the new construction numbers versus the number of individuals that they actually need a home.
Right.
And we are way under the need in this industry, and it's going to become a problem.
Yes, because in resales, people, tend to just go from one resale to the other. But the new people coming into Florida, you need to supplement that inventory with new construction. And like you said, they're behind.
They're behind
and
the
they're
building.
trying to get caught up.
Yes.
So, and one of the things that I've always thought about too is, and maybe you can talk a little bit about buying that interest rate down with points, and possibly I've even talked about getting a seller to pay some of your points to buy down the interest rate if that seller wants to go ahead and get that home sold.
Absolutely. So there's so many things we can do when you come to make it easy for a year or two. There's this called 2-1 buy down, where you can get the seller to contribute money towards your mortgage payments for the first year and 2 years, basing your mortgage payments on 2 points below market value, and the second year 1 point below market value. And it may cost the seller $4,000, but it's going to save you and make you a mortgage payment that is affordable to your need. And that is negotiable, and we have seen so many sellers actually accepting that. Good luck when you have 5 buyers and they have 5 offers. They're just not going to entertain that.
Right.
We also seen customers that they are trying to sell their home to upgrade. Their homes are actually not selling because there's not enough buyers. But they've done their research, and there's no better time than today to buy a home. So what happened is they don't qualify, because at that point would be 2 mortgage payments. So we came up with a product actually that will allow them to take the equity of that home and use it towards the purchase of this new home, and not count against the current mortgage payments against the debt to income ratio.
Really?
And it has been working great for them, because it's just there's a need, and it has been solving many family issues, because they wanted to actually move and buy a new home, but because they cannot qualify for 2 mortgages, they have their equity tied into the first home, the current home. So, and that has been really moving our inventory with the sellers.
Is that kind of like a HELOC?
Well, I would say it's kind of like a bridge loan.
Okay.
But with the bridge loan, that as known in the past.
Bridge loans are very expensive.
Right. So the bridge loan, we had to count against them the mortgage payments, which defeats the purpose of being able to qualify them for 2 mortgages. But with this product, we don't count against them the current mortgage payments, nor the equity line that we're taking out to use it for the down payment. So it makes the buyers, approvals to purchase and move forward with their home.
That's awesome.
Because by doing their numbers, it just makes total sense.
Right.
So they know once, especially new construction, and we have seen great offers out there, they are just not going to buy these homes. Give it 6 months and you will be outpriced in the market.
Right.
So that's our thoughts and our research that we have seen so far.
Yeah, that's good. That's good thinking. That's forward thinking, and being creative. And
right.
That's what we like to see, and that's why we like Mariem, because we know she and her company are very creative, and
thank you. We love your company as well.
Well, thank you.
Great group of professionals, and educate your consumer, which is all about education.
Exactly.
Yeah.
And that's what we're all about. And just to give you a little bit of a promotion here, Mariem is kind of like us. She has a nice YouTube channel as well. And all you have to do is go to Home Loans Made Easy on her YouTube channel, and you just pull up YouTube, type in Home Loans Made Easy, and she has 61 videos to educate you. So that was a good segue, right?
Thank you. Well, that's great. That's your YouTube, but we get in there. We have to definitely get a better job, putting a lot more information out there. A lot of people are seeking information because they are lost, they're scared, they just don't know where it's going to go. Even ourselves as professionals, this is something new. We never see, before you just see the last 15-20 years and say, okay, that you follow and say, okay, this is the time that when the rates is going to drop, and that's when you say that the rates actually went up. So but we cannot base our life on the interest rates. We
Right.
have to base it on the reality of the data that's out there, because that's what matters, the data.
And like what we were talking about, before I would say the market crash in 07 and 08, I went ahead and I looked back, I don't know, about 6 months ago, I think I looked to see what interest rates were in 2004 before that crash. And I believe they're right where they're at today.
Correct.
So this is not out of the norm. It's just a correction, really, if
Correct.
you want to look at it that way. It's a market correction like you have in the stock market and everything else.
Mm-hmm.
Home prices have corrections as well as interest rates in mortgage loans. So that's why, it's easy to get caught up in lower interest rates, but the only reason you were seeing 3.5% interest rates, in the early 2000s is to help stimulate that real estate market. But, we're not at that point where we're looking at years and years and years ahead of us where that market's going to be down and trying to stimulate that.
Right.
Like I said in the beginning of this podcast, presidential elections really have a tendency to slow down real estate, but after November, that's when things are just gonna change
I
and
agree.
change fast and change radically. And so if you don't want to be on that wild ride, it's probably better to go ahead and buy now.
Correct. 100%.
And that's the information we're trying to convey when you're talking about getting a mortgage and interest rates and buying down with origination points, or even so if somebody buys today and then let's say 2 years from now rates go down to 5% and they want to go ahead and remortgage, what are the advantages and disadvantages of doing that?
The advantage that I see by refinancing, actually, so let's say a customer purchases a home today and gets a loan at 5% down payments, which, if you go in just a regular conventional, if you don't have a 20% down payment, then you'll be paying a mortgage insurance.
Right, PMI.
Right. So if you wait for the market to drop down and then you refinance, the chances are the equity might be going up. At that point, you can refinance and drop your mortgage insurance. So not only you'll be saving on the interest rate, you'll also be saving on your mortgage premium that will not longer be needed. The other advantage will be maybe even consider things change, and you may consider changing the term. Instead of 30-year, you can change to 15-year. But every time we work with a customer that want to do a refinance, we always do an analysis. What you're going to be spending to get to the rate that you need, and what savings, how many years you're going to be in the property, and so the savings versus the cost.
Right.
And if it's worth it, we'll advise them to move forward. If not, we'll tell them why not, and then ultimately a decision of the consumer. So, but we will give them an analysis.
So it's not all about just getting the business.
No.
You're going to go ahead and tell them
Absolutely.
what's in their best interest. And I have some friends that actually just did that. They went ahead and they refinanced, but when they refinanced, they did it with a 15-year mortgage rather than a 30-year. And I think they might be paying maybe an extra $200 more a month, and they've cut the time in half.
Yep.
Which is incredible.
Yeah, absolutely.
So that's a very good option that a lot of people can think about if they plan on refinancing. I mean, really capitalizing on the advantage of doing that.
I have a customer right now that they just closed in their home in Tampa, and they put about, I think, 40% down payment they're not 62 years old yet. So their plan is once the rates settle a little bit, they're going to refinance it using the equity and the growth of the equity. They're going to refinance from the forward mortgage to the reverse mortgage and just wipe out the mortgage payment altogether because they want to travel.
Wow.
And that's their plan today. So we don't know what it's going to be in a year or 2 years.
Mm-hmm.
But there's so many things you can do that you cannot do with your rental, paying your landlord. It just is a lot more safety. Even though everybody has the fear of purchasing because of the rate, but honestly, you have a lot more financial safety than just renting. You have nothing when you're renting.
Especially when you get that equity built up.
Absolutely.
So, and that's, look, I mean, that's what really makes this country go around is home ownership. And if you're just going to sit there and rent, I know a lot of younger people, they think, oh, I'm never going to own, I'm just going to rent. You're throwing your money away. Because if you think about it, if you're in your 20s and you're purchasing a home, when you get to be in your 50s, you're mortgage free.
Did you know?
And you've got all this equity built up.
Right. Did you know that 85% of wealthy people in the United States, they were made by real estate?
I believe it. There's a lot, there's a lot to be made and a lot to be had. And not only that, but if you have a lot of equity built up in your home, and God forbid something happens and you have a traumatic medical situation, right? You have now equity in your home that you can draw from.
Right.
But if you've been renting your whole life and you have nothing to draw from, you're going to be in some serious trouble. So that's something that a lot of people don't even think about, is being able to dip into that equity in their home for emergencies.
They're just concerned about the mortgage payments versus I've spoken recently to customers that they are like, well, my rent is going to go up $200. I mean, mortgage is going to go up $200 versus my rent. Like, do you rather invest in the other $1,000 on your home? Or do you rather throw away the $1,800 that you never see?
Because 100% of that money.
100% the rent is definitely the interest rates on the rent is 100% versus your interest rates on the mortgage of 6.375.
Right, there you go.
So that is a reason for you to buy today.
Yeah, and like you said, you're going to pay a mortgage one way or another, whether it's your landlord's mortgage or your own mortgage, right? So that rent that you're paying to somebody else, they're the ones getting all the equity. They're the ones that you're paying for their retirement.
Absolutely.
Because as soon as that home gets paid off that you're renting, you don't have anything to show for it, but that investor sure does.
That's right.
Yeah.
That's right. And the other thing I want to mention, always take in consideration what is the benefit that you have with renting versus the owning your home, even if you finance 100%. What are the benefits? What is offered? And if you just look at two benefits, you're at a win. If you look at the equity benefits and the tax benefit.
Taxes, yeah, your write-offs.
Your write-off with the mortgage is huge, especially in the first 3-4 years.
Exactly.
So you're pretty much writing off what will be your rent payments.
That's what a lot of people don't think about, is the write-off incentive that you can get by owning your own home. And
absolutely. So if you take anything out of this, two things that you can benefit from: the equity that you're building up over time and your tax benefits.
Yeah.
If you add more, I can give you some more.
Or go to Home Loans Made Easy. I'm pretty sure that video is probably
there.
in there somewhere. If it's not,
I would have that one there. The benefits of homeownership.
Yeah, it's going to be.
Like the many things that have bothered me over these 20 years. Actually, when I started in 2004, the interest rate was a 7.25.
Okay, there you go.
So now.
And that's what it is now, right? For
that
30
is
years?
So right now it's actually slightly lower.
Okay.
And the buyers did not have as many options that they have now. You have the seller pay to buy downs. You have the increase now on Freddie Mac. How about the seller contribution towards paying, towards closing costs? You have so many different loan programs that it's amazing that it's helping consumer to. It's making it easy for the consumer to buy a home. Yet I felt on many occasions that customers are more scared to move forward, just because the rates has gone from 2, which is not a realistic interest rate. No country is going to succeed in 2%. And I'm coming from Spain where the rate was 0.75 when I bought my home, and now I'm paying probably like 1. So the economy is not that great. If we look at over time, this is not a bad rate.
No, absolutely not. I mean, I think some of you even remember, I know the older people who in the Carter years, it was like 14%, I think it was, or maybe even higher than that. So it could definitely be a whole lot worse. But I think we've got more control over it today. And why don't we talk about, so what kind of programs do you offer?
Well, I offer VA loan for all veterans, and it's one of my favorite products. You can do so much with the VA loan. I have a customer that he wasn't qualifying because his debt to income ratio is too high, and we were able to negotiate with the seller to pay off his debt as part of the transaction.
Wow.
You can only do that with VA loans. It's a beautiful product. So a ton of VA loans. Is there
a PMI in VA loans?
So they have what it's called the funding fee. The funding fee is based on the first time you use it or second time. First time is 2.15% and is rolled into the loan amount. Second time is 3.3 is rolled into the loan amount. However, if you're a disabled veteran, service connected, meaning whatever disability you have is connected to the when you were active duty, that funding fee is waived for life.
Wow.
So we always make sure that we check their COE, which is the certificate of eligibility in the website, and make sure that they are not missing out on that benefits.
Nice.
But VA product is an amazing product. There's many veterans, especially up north, moving down here. So we do a lot of VA loans. And then you also have the USDA, which is 100% financing. And but the USDA, it just have to be in certain areas that they are rural, and some areas it's difficult to find a rural home like that it will qualify. There's some income limits, so there's a little bit more restriction, but it's a great product for the right customer, because I have someone that, like I mentioned, that they're going to roll the closing costs into the loan. So they're literally moving in with $0.
Wow.
Yeah. And then we have the FHA loan, we have conventionals, we have home ready, so we have a variety of products. What we differentiate ourselves is not one size fits all. We interview with the consumer, we know what they need, and we recommend a product that is gonna meet their need, and we move forward. So for some customers, they'd rather putting more money down and having mortgage payments. For others, they'd rather having their reserves and have a higher mortgage payment. So we just like to meet with the customer via phone or person and just understand their need. And we recommend the loan that will meet their situation.
For FHA, I know FHA traditionally have been 3.5% down, but is that a variable now?
3.5% down payments. I have another product that's called Home Ready for first-time home buyer, and that one is 3% down payments. Now FHA also has another program, which is called the HUD REO program. If you purchase a home that is foreclosure by HUD, you only need $100 down payment.
You need how much?
$100.
$100.
$100.
Wow.
But there are not as many homes in foreclosure at this time that are owned by HUD. There's still few, but we have used it in the past, and it's a great product. So you only finance like literally whatever's remaining of the $100.
Wow.
Yes.
And that's what kind of program is that called?
It's FHA. 30-year fix.
Okay.
Yes, so it's called the HUD REO.
HUD REO.
$100 down.
Gotcha.
Yeah.
And then, but there is PMI with that, correct?
Yes.
Okay.
And it's a lifetime PMI unless you refinance on a loan.
Really? So,
So
it'll never go down. I mean,
never
it'll
go down unless you refinance. Unlike conventional, when you reach the equity, you can actually reach to your servicer and just prove to them that you have 78% loan to value, meaning that you have already built up 22% equity, and they should drop your mortgage insurance. You don't have to go through the refinance process.
Oh, okay.
But with the rate being at 6 and hopefully we'll drop at 5 eventually, it's a lot of people, they just go for a straight FHA. And FHA is also more flexible. You can VA, FHA, they're more forgiving when there's some credit score challenges or credit history challenges. So we have a lot more, flexibility to get through, the approval process.
If you're refinancing, do you refinance at the same closing cost rate as when you get your initial mortgage? Is there a break in there? What's involved there?
Yeah, so as far as lender fees, they're pretty much gonna be the same. The escrow, the benefits is you already have an escrow built up with your current servicer or mortgage company, so you're gonna have that's gonna just transfer to you, so that's saving. As far as transfer taxes, you already own the home, so you don't have to pay transfer tax, but you'll have to pay the intangible. So it's slightly cheaper when you come to costs, but you still have to hire an appraisal, attorney or title company.
Survey?
And survey, if you had it done already, you don't have to.
Okay.
So, yeah.
All right.
So there are different types of refinances as well, but usually we go for the full documentation one, because that way we are able to save you money on interest rate.
So if you were ever going to do that, you want to get with a lender and do the numbers and make sure that makes sense to you, because if you feel like, well, I'm going to sell my house in 5 years, but the rates have dropped and I want to go ahead and get a lower interest rate,
I may not do it. I may recommend a no. It has to be a huge reason, for example, getting through a divorce, or you need to get some co-signer of the loan, or it has to be a valid reason to justify a cost of saving versus versus what your plan is to move out and sell, and you don't want to be investing something that is not going to see the value. And we have a calculator that will show them why.
Okay.
Yeah.
Well, that's nice.
Yes.
That you're not just in it for the
absolutely
the loan, for the money. You're gonna go over it with them and kind of do the math and make sure it makes sense.
Right. And always say, just one thing I'm going to say, if you're paying 14% interest rates on your credit card, you should consider buying a home with 6.75.
Yeah, and a lot of people don't even think about that.
Right. Or a car loan. How much you pay for your car loan?
Right.
This is your home. This is your livelihood. It's going to be one day paid off and your home. So taxes, will have to pay taxes. Insurance will have to pay insurance. But the home, the mortgage, or something's going to go away. It's not going to be forever.
I never thought about that too, I mean, everybody has all these issues with how high the interest rate for a mortgage has gone up, but they don't think about what you're paying for your vehicle, what you're paying for your credit cards.
Absolutely.
So that is something to consider.
And guess what? The interest rates for the credit card is not tax deductible.
There you go. That's right.
So what I do personally in my homes is I get home equity line of credit on all of them. So if I have a major expense, I do it through my home equity line of credit, because once you pay anything with your home equity line of credit up to $100,000, that interest paid for that amount is tax deductible.
Yeah.
So you can go gamble with the money and then it's tax deductible. So
that's a great point. Yeah, I never even thought about it.
When the credit cards is not, because once you reach certain amounts of balance, you just seem like you're never getting off the payments,
So you do HELOCs?
I do HELOCs. Yes.
So home equity line of credits?
Yeah.
So you can pay those credit cards off.
Correct.
You could pay that vehicle off.
Yep.
And get it, at
tax
a lower.
deduction.
And so are HELOCs lower? Do they have a lower interest rate or a higher interest rate, or the same?
Then the first lien, then the first mortgage.
Yes.
No, the first mortgage is going to be a 30-year fixed, 15-year, whatever is your term.
Right.
Unless you go with an adjustable mortgage,
Mm-hmm.
which I would not recommend. The HELOC is going to be prime plus 1, prime plus 2, prime whatever prime is, plus whatever term you agree by the time you sign the contract with the lender. And that is variable. So the prime goes up, so goes your rate. The good thing about it is it doesn't matter what the rate is, never going to be as high as a credit card. So let's say right now, probably the line of credit interest rate is probably going to be like in the 9 or 10 top, depending on your credit score. And depending how much money you get out. So if you get 75% of equity out or 50%, so that's how your rate is going to vary. But regardless, it beats the 14, 16, 20%, 24% I saw somebody have the other day.
Hey, yeah. If you're behind in your credit card payments,
absolutely,
they're jacking it up to the max.
Right. So the best thing to do is analyze what you have, and very sadly, a lot of people think we don't do refinances right now. I mainly do it for my customers because I don't want to get so overloaded that I can't offer the good service.
Mm-hmm.
But a lot of customers have been reaching out that purchased homes 2-3 years ago, and they're struggling because they're maxing out their credit cards.
Right.
And they refinance to be able to just consolidate. Because let's say what they call it is a blended interest rates. So let's say you have 5% interest rate in your mortgage, 20% in your credit card, 12% in your car loan. So you're just paying, if you blend all that rate and divide it by 3 or 4,
right.
If you can get lower rate on your mortgage, go for it because it's tax deductible.
Sure.
So overall, I had customers who did a refinance in today's market with a 6.875 that we were able to get them on a refinance cash out.
Mm-hmm.
And their life has just made a huge difference and more in peace with themselves because every month they were not able to meet the end of the month because you're sending money and not balances were not dropping because most of it was interest.
Right, exactly. You're just keeping, you're not paying it down at all.
Yeah, so what happened is their mortgage payment may have gone up about $300, but that saved them like $1,000 a month.
Mm-hmm.
So a lot of people have been doing that because their struggle is real.
Gotcha.
So,
okay.
And that's what they call blended interest rates.
Blended interest rates. You just take them all and then divide them by whatever you have.
So if you have 20%, 15%, 7% divided by 3, whatever that rate is, as long as you can get a mortgage rate or line of credit below that,
Mm-hmm.
you're better off.
Yeah. Sounds very logical, and a lot of people don't think of it that way.
Right, and that just gives you another benefit of home ownership. Because when you don't have a home, you cannot do that.
Right. So if you're renting,
you're
not doing it.
No.
What about reverse mortgages? Do you do reverse mortgages?
Absolutely. Yeah.
So talk to us a little bit about your reverse mortgage program that you have.
So the reverse mortgage, we do purchases and also refinances. So the purchase is when the customer is trying to buy a home, they have some money for down payment. And the recent one, we had someone that had $250,000 cash. But the home that he can buy with $250,000 cash, he didn't like it. But he didn't want a mortgage payment either. So his home was about $400,000 that he liked.
Mm-hmm.
It was builder grade with the all handicapped upgrade. So it was gorgeous, but the cash was not sufficient. So he was able to purchase the home, be responsible for the property taxes and homeowner's insurance once a year,
right?
And has no mortgage payments.
That's awesome.
And a lot of people,
and has the home that he wants.
And he has a home that he wants.
Right.
And a lot of people are afraid of the mortgage, the reverse mortgage, because they're like, oh, my kids want the home. Well, your kids do not want your home. They want your money. So if you have a mortgage and every month you're the fixed income, so you're drawing money from your funds that you have to pay your mortgage, there's less money for them. And the only difference really with the reverse mortgage versus the forward mortgage is once you are not longer here and the mortgage company gets involved to find out the balance. What they do, they sell the house, they take their balance, and the remaining funds go back to the heirs.
So they're not just keeping.
No, a lot of people think it's a myth out there.
Right.
They think they're going to keep their money. Are they going to take my house? No, they will not take your house. There's laws out there. It's actually a government program.
Right.
And it's an FHA loan program, actually. That's what it is. So what they do is actually, let's say you have children that live in Michigan and your home is in Florida. If you have a forward mortgage, they have to come here. They got to clean the house. They have to put it in the market. They have to sell it. And meanwhile, if there is a mortgage payment, that mortgage payment needs to be made until the home is sold.
It doesn't stop.
Right. And if you want the home, you have to refinance it on your name. You cannot just continue to make a mortgage forever, payments forever.
Right.
So with the reverse, the mortgage company does everything for you. You just come and they will give you the breakdown what's owned, what's sold, what the real estate commission was, and here you are.
So they're not going to come along and just sell it for pennies on the dollar just to get their money back. They're going to pretty much do their due diligence, find out what the market value of it is.
With the real estate agents involved and everything. They are not realtors. We are mortgage companies, so we're not going to get involved and put it home in the market and the MLS. So they hire a professional that does all the value, all the sale, all the contract. And meanwhile, the heirs don't have to make the mortgage payment.
Yeah.
Right? So that is one part, which is getting the home you want at 50%.
Right. That's it.
And that's what I'm going to do when I'm 62. Because my kids don't want my house, they want my money.
So there is an age limit in which you can do that. You have to be over 62.
62.
Gotcha.
Yes.
So that's what you were talking about is the initial. That wasn't a refi.
So the refinance is when you actually have a house. Either you have equity on it, let's say you have 50% equity, or it's paid off. So the recent one I've done, the home was paid off. She only had to make mortgage, her insurance and property taxes payment. She also had a lot of debts inherited from a divorce, and her income is just, her social security was just not given for power, HOA, all of that. So she was struggling and reached out to us. And what we did is we gave her a lump sum of money up front, and every year she's going to draw X amount. So I called her last month. She was in Panama. This month she's planning to go somewhere. She's actually a friend, a realtor's friend, and we stay in touch with her. It made the biggest difference in her life. Yeah. She's withdraw money up front, pay off all her debt, and every year she'll be able to withdraw money. And the beauty of it is, once you do a reverse mortgage, is unlike the line of credit. If you have a line of credit with $60,000 balance, next year your balance available to draw is $60,000. With the reverse mortgage, earns interest. It's just like having money in the stock market. So $60,000 today, next year will be $62,700. And if you don't draw money that year, so following the second year will be probably $65,000 and $66,000. So your equity keeps going up.
So that's the beauty of a reverse mortgage too, is that, I mean, that's the whole theory, I think, is the home is supposed to increase in value. So, so if...
it is very helpful for many customers that they are in a fixed income, but they still want to have a good quality life.
Right. And they have limited income coming in now because they're on Social Security.
Right. And
this is a way to stop having to pay for your mortgage and still have to pay your homeowners and your taxes. But you don't have to pay your for your mortgage payment. That's cool.
And you have an income every month if you want. So you can do a lump sum withdrawal. You can do a monthly withdrawal for lifetime until you're not longer here. There's many different options.
Right. So you hear Mariem. It's not that you just stop paying your mortgage payment. You don't have to pay a mortgage payment anymore. You can actually draw
from it.
Money, funds out of the equity of your home, based on whatever the calculations are. And what do they calculate out to a certain age for people that?
So there's a calculator that we put in. There's just how old you are and then for age expectancy, and then let's say, okay, this is how much money you can withdraw monthly, or this is how much money you can withdraw once a year, and or this is how much money you have right now in your account, and you withdraw as you wish. You can do monthly, or you can change your terms. It's not like once you sign up, this is it. And in this specific scenario, this customer signed up to do a lump sum every year. Yeah. And debt free, except taxes and insurance and HOA.
Yeah. It's all about quality of life, folks, right?
Absolutely.
Quality of life.
Absolutely. And then if you look at it, actually, having equity in the home and the house paid off, but no quality of life of being able to go where you want, when you want, and you're stressed out about the monthly expenses at Social Security income, it's just not life. I mean, you cannot just be every single month stressed out because you'd be going a lot sooner, than expected, right?
And as people get older, right, they need medication.
Right.
And they need to be able to pay for their medication. You don't want to have to go without your medication. So if something can be taken off your plate and you're able to kind of just move forward in life and not have to worry about your mortgage anymore,
and this specific person that we helped, she was actually she was seeing a therapist. She was getting depressed.
Yeah.
She was getting very depressed, and her sister reached out to our realtor, and that's how we connected. And when I talked to her, she's not longer seeing the therapist, not taking any sort of medication, which is actually, I was extremely happy to be part of that.
Exactly.
Yeah, it's not about the commission, it's about the life change that you make in someone, but just being there to give them the information and then give them a final decision. She was very nervous, as you know, it's like, okay, it's a new product, but you go through counseling, they educate you. It's not only me giving her the information, but it's a requirement that you go through a licensed counselor to give you all the pros, the cons, so you know everything up front before you even start the application.
Right.
Which is very helpful because before the government got involved, there was a lot of bad reputation about reverse mortgages.
Right.
But there was all misinformation that they were not giving the consumer upfront to make the decision.
Exactly. But now that's part of the process.
It is part of the process. It's actually before the application, you have to take that class.
And you can't say, they didn't tell me about that. Oh yeah, you took the class, it was all in there.
And this is the home that she wanted. Like, this is the house she bought that home cash because that's what she wanted. But she spent all her cash on buying it. She didn't want to keep changing homes. And, she's like, this is one floor, this is what I want. So it cost her money, but now she doesn't have to move.
There you go.
So yeah, but there are, regardless of your situation, there's a solution for everything. There's a program for everything. The best thing you can do is just get educated. Call, text, and just get educated from professionals that they know what they're doing, and then you make your final decision. Don't let the media scare you. Don't let the rates scare you. There's so much more benefits of making your homeownership happen than just waiting on the rate to drop.
Okay, well then let's talk real quick about first-time home buyers program. And what kind of programs are out there? Isn't there? I know they have to go through a class because that's what kind of made me think about it. And same thing with like a reverse mortgage. They make you go through a class. First-time home buyers, I know you have to be educated. You have to go through a class. Don't they have forgivable loans for down payments with the first-time home buyers?
Yes and no. So forgivable, like they're gonna put a lien on the home. It's not truly forgivable. So when you sell the home, you have to. The Florida bond is with the program that it usually gives a down payment assistance to buyers, first-time home buyers. Whether you want to use the funds for down payments and closing costs, but it's not a forgivable program. You have to pay it back somehow when you sell the home. the interest rate is also slightly higher. However, once you don't have the funds to come to a closing, that's the right product for you at that right time. There are some requirements. You got to meet minimum credit score. The debt to income ratio is a little bit tighter. The assets, you cannot have so many funds on the bank because it's supposedly for people that actually need it. So we try to have them pre-qualify for that product before sending them shopping because it's very strict. The Florida bond, there was actually the Homes for Heroes, but they have no funds right now. They ran out of funds.
Gotcha.
Yeah, so they're talking about getting back with some more additional funds, but I have not heard anything about that.
I sold a home to a firefighter.
With the Homes for Heroes?
And he was able to get that Homes for Heroes.
Yeah. So there's nurses, firefighters, teachers,
police officers.
Yeah, they'll qualify for Homes for Heroes. However, they run out of funds. That was a good product. But just when you're ready to buy, you just do the research, see whatever is available. If you qualify for it, you don't qualify for it. So that is part of the process. Do the research and then make a final decision, but don't just be scared doing nothing.
And you'll help them do the research.
Absolutely.
You'll point them in the right direction.
Absolutely.
So, do you have one of your videos up here for first-time home buyers?
I do not have one of the videos, so that's video number 2 I have to make. There we go. Yes, so I'll do first of all, the benefits of homeownership, and I'll share it with you.
Great. Well, Mariem, I really appreciate you coming in.
Thank you.
She
Thank you for having me.
traveled from
St. Mary's, Georgia.
St. Mary's, Georgia, just north of Jacksonville. So, like I said, she was on our live stream, about 3 months ago?
About 2 months ago, yeah. 2 months ago, 3 months ago. Yeah. That's probably 3 months. It's been that long. Oh my gosh, time flies.
So I appreciate you coming back. We're going to go ahead and put Mariem's information right up on this podcast right here for you. So you have her contact information, has her mobile number, office number, fax. Do we still use fax?
Yes, we do. Because we serve everybody at their level. We still do face-to-face.
And so we do have your email.
Yep.
And that's Mariem at Fairway MC.
Mariem B at fairwaymc.com.
B.
The best way to reach me is by cell phone at Monday through Monday, 8 a.m. to 8 a.m. So pretty much all day long, 24 hours.
And she's a military specialist. So that's very cool too. But we really appreciate you coming in.
Well, thank you so much for having me. I do want to say the reason why I am a specialist, and a military specialist, for a couple of reasons. One is because the reason why I moved from Spain in 2004 here, it was because of the military.
Okay.
So I have a special place in my heart for that reason.
Very nice.
I was not a service member, but I was a dependent of a service member.
Okay.
And this country has given me so much that I want to give back somehow.
That's beautiful.
And the reason why I joined the mortgage business is because when we got the loan, when we first moved to the States, that was my first home in the States. So, active duties, veterans in general, they always go to A or B lender.
Right.
So we went to that lender and they treat me so poorly.
Really?
Very, very poorly. So, I was just, every time we go to see this loan officer, I would come out crying. And I was like, this doesn't sound right. I mean, I bought my home when I was 19 years old and I don't remember being so painful. And I did not know what was my closing costs because they wouldn't talk to me. They was always with the service member. And we did not know what was our mortgage payments.
Wow.
Every time I asked, because he did not know what questions to ask, so I asked the questions, and the loan officer would not even look at me. That's terrible. So.
And you said, that'll never be me.
And then I complained to the loan officer's manager. I was like, this is terrible. You cannot be treating people like this. Like, this is bad. I mean, I've been crying every time for 30 days, every time I come to see your loan officer. And she told me, you know what? You better get used to it because in the States, when we only pay attention to the service member, you're just a dependent.
Ah.
And I said, you're the branch manager? She said, yeah.
Wow.
I said, well, I'm so sorry you feel that way. I said, but I'm going to tell you something. I'm going to make a difference in this town. I was working at customs. I was a custom agent. I was not even a loan officer. I had nothing to do with banking, nothing. And as soon as I unpacked our furniture, we moved to the house. I got the phone book, and they looked everywhere that says bank. I applied. I said, I can be cleaning toilets, but I'm going to go in the bank, and I'm going to be doing what she does. And I started with Bank of America, and I finished now what I'm staying with Fairway now for over a decade. And guess what? My building, I purchased a building right next to that place.
Oh, really?
Where actually I did my first loan, and guess what? They send their denials.
Right over to you.
Yes. And they tell them if Mariem can do it, nobody can. So if they walk from their location to my location to do the loan.
So all they want are the easy ones. They don't want to
Yes.
do the work that it takes sometimes to help people.
So I'm very grateful for that bank or credit
Yeah.
union, that credit union. I'm very
Right.
grateful for them because in life it's not what happens to you, is what you do with it when it happens
Right.
to you.
Exactly.
So I could have chosen just to be depressed and hate this country. And the opposite is a career that has given me so much,
Good for
you know. And it went great from there. I would never have dreamed to be financially where I am
Well,
if I have not joined the mortgage business.
things happen for a reason.
Yes, and then what I learned is like you don't follow the money, you follow the relationship. When you follow the relationship and the care and serving others,
That's how we are here in this
You
office.
serve.
That's correct.
and money just come along. But when you focus on the money, you miss out on the relationship.
Exactly.
And that's what has been always a secret.
Right, and
of
it's
my
not
business.
fulfilling, really. You
Right.
know, it's. But I think that's why we have a good
We connect.
relationship here because that's how we are here at I Am Realty. It's not about the commission. It's not about the money. It's all about the
The
relationship.
relationship.
And then anybody who knows our YouTube channel can see how I work and how I do things for people, and that's why we formed a relationship with Mariem, because we know how she is from the last time you were here,
Yeah.
and that's why we
thank
invited you
you.
back.
Thank you for having me. And you're very giving and you're very consistent in giving. You give back to the community.
Definitely.
Give your time. Time is so much more valuable than giving a pen or giving
Exactly.
a shirt. You're giving your time to the community, and people love you for that
Yeah,
because you're educating them.
makes a difference.
Keep on doing it.
Same to you.
Thank you.
One last thing I want to mention is Mariem has a document checklist on
Yes.
the back of her card.
Mhm.
And I really would like everybody to go to Mariem's YouTube channel, hit that subscribe button, and hit the thumbs up button for her, and let's get her some subscribers on her
Thank
YouTube
you.
channel and get it taken off. I think you'll really be happy with all the information you'll get from her videos.
And if they want anything, just let me know, and I promise I'll make a video.
There you go.
Thank you so much.
All right, thank you, Mariem.
Thank you.
All right, thanks everybody. We
Thank you,
appreciate
guys.
you watching this podcast, and we will place it on our YouTube channel as well. But if you all have any questions at all, feel free. If you're just listening to our podcast or going to our podcast, go ahead and find this on our YouTube channel as well and make comments. We always look at your comments, and we like to see if we might have missed anything, or if you have any special comments, or call Mariem. She's the professional, and like she said, she loves the phone calls,
Yep.
and that's probably the best way to get a hold of her. All right, so thanks so much for watching this podcast, and we'll keep them coming, and we'll see you in our next one.